Assalamu alaikum, everyone. I hope you are doing well. I've had an epiphany recently, and that epiphany is as follows. My goal in this life, in this very brief time that we have alive, is to try to be as useful as possible and make everyone around me, their life, easier. If I can do that, that's my goal. If I can do that, I think I will be on the day of judgment happy with the judgment that I receive. Everything in Islam seems to be working towards making people's lives easier. And if I can contribute in even a small way to making people's life easier, then that's what I want to do. And so, with that epiphany, here comes three investment ideas that I have for 2024. These are very well researched ideas that I'm providing you, and I'm extremely bullish on them. I'm sharing with you the almost highest conviction names that I have. I have a lot more in the PIF for PIF members, obviously, but for people who can't afford the PIF membership, they'll always have this free content that they can go off of. And hopefully, with the returns that they get from the free content, inshallah, they will become members as well. So with that being said, oh, by the way, I have a promotion running because everyone does these days. In the United States, it's Black Friday, and I guess in a couple other geographies as well. But I'm not really doing it for Black Friday. I'm doing it because people are basically already being inundated with promotions, and they're deciding on which ones they want to go with. And so I feel like it's a good idea to provide this option for people who are interested in investing in a halal way. So everything about the promotion, the code that you need to use, the link to sign up for PIF membership, that should be in the description to this live stream. But you don't have to worry about that now. Now let's talk about what I want to share with you guys, which are the three investment ideas, inshallah. So let's get started. Because after all, Ohio State plays Michigan soon, and I have kickoff to get to. So, so let's get started, inshallah. I want this to be full screen. All right, so three investment ideas that I think are going to do well for you in 2024. And it goes without saying that these are investments that I think are, inshallah, halal. So first, let's take note of the macro environment that we are in, because it's basically the umbrella that covers all investment assets, and it's important to know basically what the weather is like at this point in the market cycle. So after COVID, the Federal Reserve panicked and it reduced interest rates to basically zero, and asset prices rose to heights that were not justified by their fundamentals, although I suppose you could argue they were justified by the monetary policy that was being pursued. And after that, inflation happened, and then for the Fed to get a handle on inflation, it raised interest rates, and it started raising interest rates in March of 2022. So we went from near zero to now 5.5% for the federal funds rate. So a bit of background here for those who are uninitiated. The interest-bearing system, economic system in the West, is stumbles along through booms and busts. So because of the nature of its system, the nature is very flawed. So it's going from one crisis to the next. And they call this the market cycle. By the way, there's no inherent reason why this market cycle needs to exist. It only exists because of the use of interest-bearing debt or riba. And the way this market cycle works is that when interest rates are low, cash is readily available for people, and so economic activity picks up. And then it picks up more than it should because of debt being the primary mode of financing. Or we can get into that in a different video, inshallah. But it picks up, it heats up more than it needs to, and so prices start to rise. At which point, the central government steps in and says, hey, prices are rising too much. We need to cool them down. So let's raise interest rates so that cash is not as available to people as it is, and basically slow down the economy. So you have unemployment rising, but inflation will fall as well. So the price rises that people are seeing will be subdued somewhat. And so this is the market cycle that we go through. And asset prices in this environment, as it relates to interest rates, so interest rates are like gravity when it comes to asset prices. The higher the interest rate, the lower the asset price. Why? Because when interest rates go up, people start lending their money, and therefore less money is spent on the real productive assets in an economy. And then when interest rates go down, people have access to cash, and it's less desirable to lend your money, and so they buy up assets, and asset prices rise. So there's an inverse relationship between interest rates and asset prices. And as you can see from this table, interest rates have been rising for the last 2 years, basically. And as a result, we've seen a pullback in asset prices. So this is the market cycle that I was telling you about. So we have an economic cycle, and that's in the bright green, and then we have a market cycle that's in the red. So with and you'll see there's a difference between them, and the reason why there's a difference between them is that the market is always forward-looking. It's trying to look around the corner and seeing what's coming next. So the market is always one step ahead of the economy. It normally is. So the economic cycle, since interest rates were rising, and as I explained, when interest rates rise, economic activity falls. So as economic activity is falling, the market starts to fall as well. And as we saw in the last slide, we are basically somewhere on this part of the curve where things are falling. So we may be at the point of accumulation here, where there's an arrow that says accumulation. We may be before it, but what we know for sure is that we're not at the top of the curve. And therefore, it makes, and we know for sure that what's coming around the corner is an interest rate cut, because the economy will slow down even more than it has. And we've seen some signs of this slowdown through auto loan delinquencies, credit card delinquencies, unemployment rate rising. We've seen all of that. So we've seen all the signs of this slowdown, and perhaps it becomes more acute in 2024. In fact, it's probable that it will become more acute in 2024, at which point what will happen, what central governments around the world will do, is they will bring down interest rates in order to increase economic activity again, at which point we start to be at that markup, at the markup part of the market cycle, and prices start to rise again. So as interest rates are cut, prices start to rise again. So we know it's going to happen. We know it's going to happen. It's just a matter of when, how soon. Is it going to happen in the first half of 2024, the second half, maybe in 2025? We know, but does it really matter? If we know that we're currently at a point where, prices have fallen, there are some attractive deals on the market. We know that in the future, these prices will rebound and probably shoot up at some point. What should we do in this situation? Well, I think the rational thing to do is to be a buyer. And I'm not saying we should go out and buy all in one fell swoop, but we should be accumulating at this point. This is, I think, not something that needs that much debate over. This is the period of accumulation right now. Maybe we have more to go down. As I mentioned, we're not sure, what part on this graph we are, but we're not at the top, and we know that there's an inflection point upward at some point in the future. So now our role is to dollar cost average into these great deals as they present themselves, and I'm going to go over 3 of them. So the first investment idea is Dynatrace, ticker symbol DT. Now, this is a company that provides software that monitors the applications and software and websites of companies. So companies now have a lot of different applications, a lot of different software services, a lot of different websites that their business is reliant on. And previously, they were basically managing them separately. And Dynatrace has a software service that allows companies to monitor all these applications in one place, provide health reports for these applications, understand if they're performing well, and even suggest improvements and fixes to bugs as they happen. So increasingly, more and more companies are becoming basically technology companies. And so increasingly, they need software like this to see the vital parts of their technology systems all in one place. And Dynatrace is, according to Gartner, which is a very well-respected research firm, according to Gartner, Dynatrace is basically ahead of the pack, ahead of its competition in terms of its ability to execute and completeness of vision. And so that's what we want to invest in, right? We want to invest in the best of breed. We want to invest in a secular trend, but we don't just want any one player in that secular trend. We want the best of breed, and Dynatrace is, and it has the numbers to back it up. So you have gross margins of 80%, which is fantastic gross margins, and they suggest that this is a company that has pricing power, has a distinct product, or else it wouldn't have this pricing power. It has a moat around its product, because without this moat, without this difficulty to compete with it, it would not have 80% gross margins. It would have to reduce its costs in order to compete with other players. But when you have gross margins of 80%, you have a distinguished product, and Dynatrace product is distinguished as per its gross margins. You have 22% return on capital. So what does this mean? It means every $100 that you give Dynatrace, it's able to get you $22 on your investment every year. This is a fantastic return. And in fact, NASDAQ recently named Dynatrace amongst its highest quality companies. And it has 0% debt. So this is something that allows Dynatrace not only to prosper when interest rates are low, but also when interest rates are high, like they are right now, because it has enough cash. And in fact, this is not on the slide, but its free cash flow margin is north of 20% as well. So it's generating cash, has no debt, doesn't need to raise money, has amazing gross margins. This is an excellent company with a product that is highly distinguished and not easy to compete with. So we have in our PIF membership, we have buy and sell prices. So the buy price is basically, we cover now, I think it's close to 50 different assets. And the buy price basically tells you at what price and below we would still buy. And the sell price tells you at what price and above we would start shaving off of our position. We don't do anything in one fell swoop. We do it gradually. And between the buy and sell is where we hold. So right now at the current price for Dynatrace, it's 52, which is between our buy and sell prices. So we'll hold at this point. But if it's, if it goes below our buy price, then we buy. And whenever it reports earnings, we update these buy and sell prices. So for all of the assets that we have, when they report earnings, we update their buy and sell prices so that they reflect the latest results of the company and the projections for that company. All right, number 2 investment idea is Enphase Energy, ticker symbol ENPH. By the way, these ticker symbols, so when I say DT for Dynatrace, ENPH for Enphase, that's just if you want to buy this investment in your brokerage, this is the identifier for this particular investment, which is it's a unique combination of 4 letters or 2 to 4 letters that distinguishes the investment from everything else. Think of it like a social security number in the United States. So ENPH, Enphase Energy is a company that initially it started with microinverters, and in fact, I think they actually invented microinverters. So what are microinverters? So solar panels generate electricity, direct current, DC. And the houses, most, at least in the United States and many other places in the world, they use alternating current, AC. So you need conversion from DC to AC, and that's what the microinverter does. Previously, before Enphase Energy, all of the DC energy that was generated by solar panels would go through the same inversion point. And then Enphase Energy said, no, let's put microinverters for each panel. For each panel in our solar panel group, it will have its own microinverter. So what does that mean? It means that, first of all, you don't have any limitation on the size of the solar panel sort of installation that you have, since it's not all going through the same choke point. Second of all, you can, if there's a problem, you can pinpoint which panel is causing that problem. And third of all, you have diversification in the points of failure. So you don't have to, so in the previous model, if that inverter from DC to AC were to go bad, the entire, all of this, you were cut off from energy from your solar panel installation. However, with the microinverters, if one goes bad, the rest are still working, and so you're not cut off. So it's a more robust system. So it makes all the sense in the world. And I think, basically, you won't have the old system anymore in a few years. And Enphase Energy is a leader in not only in microinverters, but it's expanded to a holistic solution for residential and commercial solar installations, where they have not only microinverters, but also battery storage that they provide and software to monitor everything. So the sun doesn't always shine, so you need to store the energy that your solar panels produce, and that requires a battery. Enphase provides that as well. And if you're like me and you believe that solar energy is the most plentiful and sensible solution for transitioning to a renewable energy economy, then you're on board with the notion that solar energy is a secular trend. It's going to become increasingly part of our energy generation. And you see in 2017, this yellow bar, this yellow row at the very bottom, it represents the percentage of total energy generated that was generated from solar, and it's less than 2%. And it more than doubled to 4.5% by 2022. And in the next 5 years, it's going to do more than that. And you can see, so the green here on these bars represents renewable energy, and the gray represents the non-renewable energy sources. You can see that the renewable energy is increasing, and I think it will continue to increase for the next decade or two. And I think solar energy is going to increase as a percentage of renewable energy as well. And the numbers bear that truth. So if you look at between 2021 and 2022, still 2023 numbers we don't have because and the year isn't over. But between 2021 and 2022, it was clear that solar energy was the fastest growing source of energy. And so that small sort of row that's yellow on this slide, on this slide, has so much room to grow. There's so much room for solar energy to grow. And when you look at Enphase Energy, just as we said with Dynatrace, we want the best of breed. We want a secular trend, but we want the best of breed in that secular trend. And Enphase Energy fits that bill. It has a net promoter score of 78%. So just for context, anything above 50% is considered excellent. Close to 80%, as Enphase Energy is exceptional. And what this score means is that not only are customers satisfied with the company's product, but they're advocates for the product. They're telling their friends, their neighbors about their product. They're that satisfied with it. And when you have a setup like this, number one, you have proof of the quality of the product. But number two, you have a way to grow that is not expensive, and it's the most effective way to grow, which is word of mouth. So Enphase Energy has this, and it's expanding to more than 100 different countries, and it's always offering new solutions. It's a very well-run company. I really like it, and management is always exceeding their guidance. They'll give a conservative guidance, and then they'll exceed it, and they've done it at least for the last 2 or 3 years straight. Now the price of this stock has pulled back substantially because interest rates are as high as they are, and typically when people install solar, they don't have cash for it, so they need a loan. So Enphase Energy has suffered from this because loans are expensive now, but eventually interest rates will fall, and this secular trend is not going anywhere. Enphase Energy being the best of breed, I think you're looking at an easy beating of the market I think in the next 12, 24 months, and probably much more than that. And I always like to look at insiders, see what they're doing. Now, insider selling is oftentimes noise. There's something that people don't really tell you. Insider selling is often noise because people need money for a lot of different reasons, but insider buying is signal. Insider buying is very strong signal that the person buying actually believes in the company and thinks that it's at a discount. And if you look at recently, the CEO bought a whole chunk of shares at a price of $90, and a member of the board bought more than 4 million in shares in September at $122. Now, what is the current price of Enphase? It's close to 100. The buy price for Enphase is 120. The sell price is 154. So again, we would buy if it's less than 120, sell if it's more than 154. All right, the third idea I have for you guys is Bitcoin miners. There are three. Now, you want exposure to Bitcoin moving into 2024. This is my hypothesis. This is my proposition to you, is that you want to have exposure to Bitcoin. Now, you can either have exposure to Bitcoin through buying Bitcoin, and if an ETF is approved, there will be another way to get exposure to Bitcoin, or you can buy Bitcoin miners, and this kind of has a leveraged effect, because oftentimes Bitcoin miners hold a lot of Bitcoin, and so when Bitcoin goes up by a small percentage, Bitcoin miners go up by an even larger percentage. This has been the case in the last couple bull runs. There are three, I think, very strong catalysts for Bitcoin moving forward. So you have the ETF approval, which would basically make it possible for just average investors to buy or get exposure to Bitcoin in their brokerage accounts. So the same way they buy a stock, they could buy a Bitcoin ETF. And we'll see a second historical examples of how ETFs have affected price. Number two, you have the halvening, which is happening next year. And basically what happens is that the reward for mining Bitcoin gets cut in half. Every 4 years, it gets cut in half. So you have supply cutting in half every 4 years. And with the ETF approval, you should have demand going up. So demand going up, supply cutting in half. That's a good recipe for price. And then the third thing is you have secular trends that are wherein it's become clear that fiat, or currency that isn't backed by anything, that central governments can issue at will, is not a good way to save your purchasing power. I think this is becoming increasingly clear as debt is taking over the world. So if you look at ETF approval, let's look at what happened to the price of gold. Since the first ETF for gold was approved, and this happened in 2004, the ETF GLD launched, and you can see we went from somewhere close to 400 to now we're closer to between 1700 and 1900 basically for gold. So we did a 4x basically, a little bit more than a 4x in this time. Now, I would say the catalyst that will be for Bitcoin is much stronger than this 4x. And the reason why I say this is because with gold, when the price goes up, mining of gold goes up. So the supply increases when the price increases. And that keeps the price under control. However, with Bitcoin, there's a schedule for how much Bitcoin gets introduced every period of time. And the price doesn't affect that schedule. So as I mentioned, you have the halvening happening. The supply is going to be cut in half around April, May of next year. and that's regardless of its price. So I think you're going to see a lot more price appreciation in Bitcoin than you saw in gold, even though the appreciation in gold was not anything to scoff at. But also, I would say that the demand for gold, the use cases for gold, haven't really increased that much in the last 20 years, whereas with Bitcoin, the demand for it will increase a lot more than gold, demand for gold has. So I think you're looking at, if we were looking at the same time period, I think you're looking at more of a, in the next 10 years, something more on the order of 10 to 20x, believe it or not, in the appreciation of the price of Bitcoin. Not financial advice, do your own due diligence, of course. So at the halving, at 2012, most Bitcoin was less than $16 in 2016, because every 4 years the halving happens for Bitcoin. It was between 256 and 1,000. 2020, it was between 4 and 16K. In 2024, if we just go off of the effect of the halving, it should be between 16 and 65K. However, when you add the other two components to what I said, which was increased demand from ETF approval, as well as the secular trends increasing demand, I think that this number is going to be well over 100K in the next 12 to 24 months. And the secular trends that I was referring to as it relates to Bitcoin relate to debt taking over the world, basically. In the United States, our debt has increased to, now it's actually close to $33 trillion. Other countries are suffering from the same dilemma. And guess what? This debt has to be paid with largely printed money. And so people are waking up to the fact that it doesn't make much sense to save your money in a medium that is the supply of which is scheduled to increase so much. And so it doesn't make sense to save your purchasing power in fiat currency. And more people, especially with the ETF, are going to say, why don't I just, park my purchasing power in a Bitcoin? It seems to be going up in price all the time, and Bitcoin is a product that demand for it goes up the more its price goes up. So it's like some of the luxury brands. The more the price goes up, the more demand goes up. In this sense, the secular trends are basically a tailwind for Bitcoin that is going to push it for the foreseeable future. So those are the three investment ideas that I have a high conviction in. You have Dynatrace. It's currently as a hold, given its current stock price. But we'll update that with its new earnings, and obviously if the price changes and we get an opportunity, we'll back up the truck on that. Enphase Energy, I do plan on buying a whole lot more towards the end of the year. I think that considering how much it's fallen in price in the last year, some investors will want to lock in their losses in order to offset their taxes. So I'm hoping for some weakness in price, additional weakness, not to say there isn't weakness already, but it's still in our buy area. So we'll be able to buy more of that, inshallah, towards the end of the year, early next year. And Bitcoin miners. I already have a Bitcoin miner that I'm very heavy on in our PIF growth portfolio. I may diversify a bit our Bitcoin miner exposure. You can follow all of the buy and sell prices that we have for our assets, as well as all of the PIF portfolios that I invest in using my own money by becoming a PIF member. And until this Sunday at midnight Eastern Standard Time, inshallah, you get 40% off all PIF memberships. The difference between the premium and elite membership, with the elite membership, you get access to the course that Mastering Halal Investing. You get access to that recorded, and then every month, inshallah, I'm going to be adding another lesson to this course where I go live with the students that are in the course. And so you get access to that for a year. So that's 12 months of lessons. So one lesson every month, 12 lessons, in addition to the recorded course that we have right now. So that's elite membership. With the premium membership, as I mentioned, you have access to all of the assets that we've covered, their buy and sell prices, all of our portfolios, any deep dives, and we'll do 2 every month, inshallah, and the community of PIF members that you can interact with. So do take advantage of this opportunity, PIF membership. The sale or the discount ends this Sunday at midnight Eastern Standard Time. Do not miss it, inshallah. So with that being said, let us see. Rami Al-Khudri says, I already bought one fell swoop a couple months ago. I still think that you'll do, inshallah, quite good if you are patient. Someone. Okay, not really into technical analysis. So speculation, is it haram? Well, when you get out of bed, you're speculating that you'll be able to no harm will befall you. And the speculation is a part of life. You have to speculate in order to function. So there's no restrictions in Islam on speculation per se. There is restrictions on things like gambling, which are zero-sum games with no discernible benefit. There are other things that are prohibited that involve speculation, but speculation just in and of itself is not haram. Which part of options is halal? So I did explain this in great detail in an article that I have on practicalislamicfinance.com. I do encourage you to read it because there's some nuance there, and I think it's important to understand that. And it's free. The article is free, so you can just go there. Oh, and I also have a video on options, so you can watch that as well if you prefer videos. Which app I use for investing from India? I think maybe Interactive Brokers may be good. I think it's available in India. Getting used to their platform is not easy though. Database on charters, not trading. I don't believe in technical analysis at all. I don't think the past price is a good indication for near-term future price changes. That just doesn't make sense to me. I always say it. I think technical analysis is largely just astrology for men. So I wouldn't focus on technical analysis. Instead, focus on fundamentals and doing the types of analysis that you saw me do, inshallah, in this live. But tell me, best application for investing by Interactive Brokers. What are your thoughts? Okay, XRP, I think XRP is scheduled. We'll do a deep dive on it for PIF members. For Tesla stock, I've been bullish on it, since 2016. I think I made my first video on Tesla stock in 2018, I believe, or 19 maybe. But I'm extremely bullish on Tesla stock. It's a very big portion of the PIF growth portfolio. And any weakness in the stock is an opportunity to buy. You combine their advantage in full self-driving, and then combine that artificial intelligence with robotics, in addition to the electric vehicle sales and software and add-ons that all those revenue sources, makes Tesla, I think, a no-brainer. It's definitely something that for the next 10 years, Tesla will be what Apple was in the previous 10 years. If you have excess cash and you have a mortgage to pay, would you spend towards paying off your mortgage now, or short-term invest in this market, hoping to pay off mortgage when market is up? This is a very tough question to answer, but I like to just say, listen, if you're paying interest, get out of interest as soon as possible. Do whatever you can, like your hair is on fire, to get out of interest as soon as possible. That's what I'll say. Now, whatever path leads you to getting out of interest as soon as possible is the one that I'll take. So, you got into interest, you were muttar, you didn't have any options, you got into interest. May Allah forgive us all. But when you're there, you want to try to get out of there as soon as possible. Don't ever become complacent about it, used to it. It's something that you no longer recognize as something that you shouldn't be in. And don't ever have that happen to you. It's one thing to be forced into a bad situation. It's another thing to be in that bad situation, not recognize that it's bad. So that's what I would say, inshallah. All right, guys, I hope this was useful. Thank you for tuning in, and take advantage of the discount before Sunday at midnight. Until next time, take care of yourself. Assalamu alaikum, and peace be upon you all.